President Trump and Republicans in Congress recently approved their tax reform package, but the debate over tax policy and its effects will continue through most of 2018. One look at how the measure affects people in Massachusetts was recently put out by the Mass Budget and Policy Center. We'd like to welcome the center's president, Noah Berger. Thank you very much for being with us.
Great to be here. Thanks.
First of all, what about the measure of who gets the most money out of this? If you look at this, how it plays in Massachusetts, how does it look?
Yeah, this is a large tax cut. At the federal level, it's about $1.5 trillion, and it's skewed very much towards the highest income taxpayers in Massachusetts and in America. The tax cut for the highest income 1% of taxpayers, once you allocate out the corporate tax cuts, is about $84,000 a year. That's about the median household income for a Massachusetts family. The tax cut for a middle income household is about 1/70th of that, and a lower income household is even less. So the benefits of this flow overwhelmingly to very high income folks. I should say the dollar amounts would be skewed even if it was a flat tax cut. If everybody got the same percentage tax reduction, high income people get a larger tax cut in dollars because they earn more money, they make more money. But even if you look at this as a percent of income, high income people do much better than everybody else. The highest income 1% gets a tax cut of about 2.8% of their income. Middle income folks about 1.7% of their income, and low income people about 0.6% of their income. So this is specifically designed as a tax policy to give the largest tax cuts in absolute dollars and as a share of income to the highest income people in the state and in the country.
What about the effect for people who are eligible for the earned income tax credit? Now, their income has to be fairly low to begin with. Does that change in any way?
So there's a change that's going to hurt people who are earning the earned income tax credit, and it has to do with the way inflation is calculated. The federal government is changing the way they calculate inflation. That will show inflation as growing at a slower rate than the current measure shows inflation is growing, and as an effect, the value of the earned income tax credit over time will decline for lower income working people who currently benefit from that tax credit. I should say the governor in his budget this year proposed an increase in the state earned income tax credit, which could actually more than offset some of that decline. I think that's a good idea because there's a lot of evidence that a strong earned income tax credit is good for not just helping families make ends meet in the short term, but has really positive long-term effects on the ability of kids to do well in school, their lifetime earnings. So addressing those issues of helping low-income families to make ends meet is really one of the best ways to expand opportunity. And the legislature in Massachusetts has worked to raise the earned income tax credit in the future. The governor is supportive of it too and has been in the past. So I think one of the things that we may see this year in Massachusetts would be an increase in the earned income tax credit, which I should say actually pairs really well with raising the minimum wage because one of most of the evidence of the earned income tax credit is very positive. One of the concerns is that sometimes employers might actually reduce wages if the worker is getting an extra tax credit. A minimum wage increase sort of makes that impossible for low-wage workers. If there's a wage floor of $13, $14, $15 an hour, then workers are guaranteed to get that wage and the benefits of an earned income tax credit. And then you can get to the point where low-wage workers really can start to make ends meet and start to be able to pay for their basic expenses like rent and food and clothing for their kids. And that can make a big difference in those families' lives and in the long term, the lives of the children too.
One of the more dramatic changes in the reform is that there's a lower ceiling on deductions for mortgage interest. That means people who own pretty pricey houses are going to feel some pain. Maybe we're not worried about them, but what about the rest of it? Doesn't that ripple out in some way, whether it's in terms of the state budget or just the whole political climate around budgets?
Yeah, I think that the loss of the mortgage interest deduction could have some effect on housing values. I think there's a question of how much more you want housing values to go up, as housing costs would go up as well. And there are definitely trade-offs and pluses and minuses in the budget, and people in sort of different specific circumstances are treated differently. But if you just take a step back and look at the big picture, when you sort of net off all of those different moving pieces for very high-income people, on average, their tax cut is about $84,000. So ultimately, what this is a large tax cut that goes primarily to very wealthy folks and to corporations where their dividends and capital gains ultimately end up in the pockets of the people who own stock. I think an interesting question at the state level is what should the state response be? And one way to think about that is to say if the federal government were to say, we're going to send billions of dollars to your state, the way this plays out, the highest income 5% of our population gets about $5 billion in new tax cuts as a result of this, and the highest income 1% gets about $3 billion in new tax cuts. And if the federal government was going to come to us as a state and say, we're going to send billions of dollars of new money into Massachusetts. How would you like that spent? I think most people would say something like, how about things that strengthen our economy, expand opportunity, like money for education, making higher education more affordable, maybe fix our transportation systems, our roads and bridges and the T. Those are things that would make a huge difference in people's lives. I don't think a lot of people would say, what we need most is really big tax cuts for the highest income people in our state. And on a positive side, there are things the state could do. If the state were to adopt our tax system to sort of offset some of the federal changes, to say, maybe we should ask folks who are making the highest income 1% of the population to pay a little bit more in state taxes that we could then use to invest in those things like education and transportation that really make a difference in people's lives. That would be a way of sort of indirectly changing the federal policy, or at least how it affects the state of Massachusetts, into ways that could actually be beneficial in the long run.
Speaking of education, the federal tax reform has one feature for people who have children going to private schools. Talk about how that plays out in various income groups.
So there's, as most people know, there are what are called 529 plans that allow parents to put away money for their kids' college education, and it's a way to try to save for college tax-free, which is an important benefit for a lot of families. What the federal bill said is you can use that same tax benefit system to pay for private school tuition. So that's obviously a benefit that, again, benefits those who are in high income tax brackets and are planning to send their children to private schools. The problem at the state level is that's a loss of state tax revenue also. So again, money that could conceivably be spent for things like our public schools will now go in tax cuts to people who are able to send their children to private schools.
Now, I know you didn't quite focus on this as such, but one thing we've been hearing a lot of since this passed is that, well, the corporations who benefit the most from this really are going to just recycle that money back into jobs and higher pay. We've heard these anecdotes about big companies doing things like that. Eversource is cutting back its rate increase. I mean, so isn't there a good side to this?
We don't have much evidence other than a couple of anecdotes that that's going to happen. Eversource is an interesting example. There are some industries that are very closely regulated, like utilities.
And they're a monopoly, too.
And they're a monopoly, and they're actually sort of required to do that. Most of our economy doesn't work that way. Most of our economy is a free market, a totally free market economy where businesses, if they make higher profits, can choose to just pay more to their stockholders. And our problem in America wasn't that there wasn't enough cash for companies to invest in stuff. In fact, companies had a lot of cash on hand and were not using it to build new plant and equipment or raise wages. And there's no specific reason to think that there's going to be a big boom in sort of corporate investing in America as a result of this. And in fact, in the long term, if this leads to budget cutbacks that harm ordinary people, that could mean people who would be potential consumers have less money in their pockets. And ultimately, I think companies sort of make their decisions based on, is there going to be a market for our goods? And if there is, they expand. And if there isn't, they tend to not.
Your report came out at a time when President Trump was saying that his policies, and I think largely this tax reform, were vindicated by the robust stock market. What do you think now?
I think it's harder to make that argument now.
All right. Thank you very much for being with us.
Thank you.
Berger from the Mass Budget and Policy Center.